Good day. Ira Epstein of Linn Associates with your metal market wrap-up, and this is for Tuesday, and we're now at the 23rd of March, 2021, 6:15 p.m. So we look today at Fed Chair Powell, and it's so often you want to say Fed Chair Yellen. Fed Chair Powell and Treasury Secretary Yellen giving their answers to questions in front of a House Financial Committee today. And the one thing that just keeps standing out is Fed Chair Powell does not think inflation is going to grab hold. He thinks that there will be a small surge to it. He said as people come out of the COVID, you'd expect that, but then it'll sink right back. He's given his reasons. Supply will come back to take care of that. More important, he's hoping that employment will come back to help that, because both he and Treasury Secretary Yellen are very, very focused on the employment situation. That means it's going to be addressed. When you get those two doing it, you have to look at that. So for the gold market, if you're looking right now and saying to yourself, okay, I'm going to get inflation, how? If you look at energy prices, they are coming off. They're off about $5 from the recent tops, and that is a sign of less inflation coming into the market. The stock market's sort of holding. The note market is around the 163, now no longer near that 175 level, and that's an important event as well. So when we look at gold and we just look at the chart of closes, I know I'm a broken record, but as long as it stays under that, you have to have a downside bias on the longer term. When you go to the daily charts, as I said and I've pointed out, it's the same pattern we've been getting. You get these spikes, you come up and you keep failing at them, you don't get a rally away from them. Until it's over, folks, it's not over. Yes, the pattern is friendly in the sense that you have higher lows, but suddenly we're getting a bit of a lower high. So the market's starting to come in sort of like that right now. What's it pulling back to? The 18-day average of closes, and as you know, I believe that's the line in the sand. I think it's a very, very important number because it's from there that the markets try to figure out what to do. Now, you do have two of the elements necessary to be bullish. You certainly have the trend is up with the swing line up until today, where you got that little bit of a pattern that I'm bothered with, that it's now got lower highs and higher lows. The bias is up. The Bollinger Bands are far away from where the market's at. And momentum, well, that's the element. It's starting to drift down. Drifting down isn't bearish. It's gotten away from being overbought. Neither number is longer over the 70 level, as you can see. I'll bring you right here, so I hope I can get it. There you go. So that's the correction. So if the bulls want to make a stand, I would say that right here, against that 18-day average is where they'll do it. They don't want to see this number taken out, and that number was 1716.60. So will they take a $5 risk in the market to try to prove themselves? They might. The gold-silver ratio, still gold gaining on the silver. You need more continual ounces of silver to buy an ounce of gold. When we get over to the silver chart, you went down to the Bollinger Band today. What do we say in unison? First challenge of the Bollinger Band, especially when you're oversold, that's where the pros are covering shorts. That's what I believe. So I teach this. This is the way I do it. I think the pros are coming out here. What are they going to do? Play for the 200-day average and hope it keeps going down? Doesn't make sense if the industrial metals are going to get a bid off of improving eventual conditions. And we know Europe is in trouble. Their COVID situation is absolutely terrible. They're going after AstraZeneca and other makers of vaccines and saying to them, if you're going to manufacture in the EU, you got to meet your obligations here. India's got problems as well. When you go to copper, this is very much what I expected. I told you to expect choppiness here as the market wrapped its arms around price. This is all the formation that you keep doing against that number, where we have to determine, is it forming a top or a base? We don't know yet. As I move into the platinum market, the trend is down. So you've got a pattern of lower highs, lower lows, Resistance is now going to be the 1186.40 area. That, if the pros are going to come out and sell, that's where I think they're hitting the market, with stops over that 1197 area, looking for the possibility of the lower Bollinger Band at 1134. And in the palladium market, it's still bullish. The market is corrected, being overbought, until the market takes out 2550. The bulls are in control of this market. This is the strongest looking of the markets, and notice how the market came out of that sideways action. Think back to copper. That's pretty much what it too is doing, and that's how you look at what these markets will do. Last, we can come over to the dollar, and I made a mistake here. This arrow should be pointing up. You now, with today's action, back to the pattern of higher lows, higher highs, the resistance, the 92.56 area. If the market should take out 91.69.5, you break that uptrend. Now, you're going to get a bunch of reports that are coming out from now through next week, and you just want to keep going with them. As we're getting to the end of the month, we're going to get then to the employment reports and everything else you can imagine. We write about this in a whole array of markets, be it the currency markets. I don't know if you know, we put out a product called Chart of the Day. It's with price counts. Gives you an idea where the markets might be going on them. Price counts are one of my favorite tools. So if you're a trader that's looking at longer term to get an idea of where a market might go, it doesn't tell you how it's getting there. It tells you where it might ultimately be going. Well, it's a neat way to get it. We do them on the weekends, we do them during the day. And on the weekend, we give you the groupings, be it the grains, the soft commodities, some of the financials are all in there, so things you need. How do you get our information? The best way is to call my staff to get you taken like that. I know you want to hide behind it. We're good people. The next way, go to the website, sign up for the free offers. We'll be sending them out to you. You'll probably have to talk to one of our staff to get codes for your charting software and things of that nature anyway. So why not just make the call? I'm Ira Epstein. I'll talk to you tomorrow. Take care.